Well, you're watching the Union Budget 2016 coverage live from the Mumbai News Centre, the headquarters right here, and we've got presence across the globe. Tanveer joining in Singapore, Sandeep Gurumurthy is in our Delhi News Centre, and yes, Neeraj Shah. In minutes from now, you will get him on the budget wall with Madhusudan Kela, and there you see the lineup of experts just hitting the ET News Centre. Hiren from Alchemy Capital, he will be joining us in just minutes from now. But also got with us Naren from ICICI Prudential right here with us on our budget set. So let's quickly go across to him and chat about what he's expecting from the budget while Hiren gets in here and mics up. We're going to go to Naren in just now.
And Naren, I can secretly see that you're folding your hands. Are you praying that long term should not come? Early morning prayers.
See, actually, for mutual funds, for mutual funds, the scope for long-term investment. So whether it is 1 year or 3 year,
but Naren, I'm sure the prayer is that people should stay put, stay invested. Your campaign,
stay invested
right?
is, I think, more important than anything else, and that's what we are working for through the year. Not only just staying invested, people invested after the elections. If this year they don't invest, they're going to miss the opportunity. So
why should anybody invest? Because earnings are not there. I'm not talking about returns, but I'm talking about earnings. Assumptions have got challenged. And the kind of economic recovery which everyone projected, it's not come through. Can this budget do anything different? Because this is the moment for Finance Minister to announce something grand, something big, and something out of the box.
See, a budget is a process. You will have. It is not something that there is a global environment. I believe that people say nothing is happening, but I would say a lot of the problems this year are not because of India. It is because of the world. So I would say that, you can blame everything on, the fact is that you need a slight improvement in global sentiment. You need an improvement in global recovery. So I would say that budget is part of this process. But having said that, as I keep telling people, in 2007, everything was looking good. Was that the year to invest? Nothing. If was 2008, second half, were things looking good? Very bad. Was that the year to invest? Yes. I think while we may not be in 2008 kind of environment, we are proceeding to a 2011 kind of environment, which again in retrospect turned out to be a good year for investors who invested.
Well, Rashesh also joins us. Hiren, good morning to you. Thank you for joining us. Good morning. Rashesh, I'm going to take off from where Naren left. That budget is in process. A week from now, when we would be discussing the market outlook, budget would have been history. But the day matters. What are expectations for the day?
And considering, Rashesh, you were the first ones to call that the Nifty is actually going to go to 7,000 when? In November, right? And
November at a social party and, well, full marks to you for that.
Well, it's always a hypothesis and it always feels good when hypotheses a few times come true. But yeah, I think as you said, this is an important day because it is also the time the government will set the tone for the coming year. Because as you know, there's a huge global crisis, global slowdown going on. And along with that, there are a lot of Indian issues like bank NPAs and rural slowdown and all of that. So we need to see the government set the tone, the government set the priorities about what they're going to focus on, where the resources are going to go, and what is going to be the direction of the economy for not only the coming year, but I think the coming 3 years.
Rashesh, I'm going to come to you and ask you from 7,000 what next in just a bit, considering you've been getting all the calls right. But Hiren, you've been the only one who sort of stuck your neck out and said that no, long-term capital gains tax is not coming. So it's back to the basics then. It's back to earnings. It's back to the globe. What is that one key thing, nonetheless, that you're going to look out for from the budget this time?
I just want to make one correction. I didn't say it's not coming. I said
the case is not strong for it.
I said that there is no logical case for it.
Your gut call it is not coming.
Sorry?
Your gut is it is not coming.
Because the case is not strong.
Because the case is not strong.
So are you long into the event?
No.
Why?
I mean, we are already, as in we don't trade, right? So there's no going long or short. I think we're invested.
Now we know
so
why
that's
rapid fire works, right? The truth comes out. Go ahead.
Yeah. Sorry, what were you?
No, I was just asking you. So, what is it that you're going to look out for from the budget commentary?
No, I think there are a few key things that I think everybody is looking at. The most urgent is the PSU bank recapitalization. I mean that event has been brought to the fore because of the acceleration in provisioning. So I think people would want comfort around the fact that the government recognizes it and that enough capital is put on the table to recapitalize the banks. Second, obviously, is the overall thrust of of spending. Where is it that you are allocating resources? Because frankly speaking, there is always in the budget, there is only that much that you can do, and there are many competing objectives that you have. I think pretty much a little bit of the tone has been set by saying that you need to do something about the rural economy because there's a lot of stress there. So you should see something happening there. And then secondly is infrastructure. But as I said, I've been of the view that you can't pick all battles. So hopefully they pick the battles that, where the momentum is already there, things like road, urban development, so on, and obviously housing. So these are probably 2-3 areas that they should focus on. And also some creative ideas for additional resource mobilization.
Creative idea for resource mobilization. I think that is the talking point, Neeraj. A creative idea, because often whenever there is crisis always gives you this opportunity to take bold, strong and new measures.
We've taken that, Nikunj, haven't we? In this budget, we have taken a bold, strong and a new measure. We've got a battery of guests. You've been speaking to a couple of them. We have this fantastic video wall from where we'll be getting you live analysis. And we have the big man himself in the studios on the wall, Madhusudan Kela, with us as well. Madhu, so good having you. Thank you so much for joining in as well.
Good to see you.
So, we have had Naren, we've had Rashesh and Hiren talk about their thoughts on what is the most important thing for the budget. I believe there are 2 or 3 things top of your mind. Let's talk about the fiscal math first, because as the graphic will show you, the fisc deficit numbers are probably the most important number that the market seems to be hanging on. What is your estimate?
Yeah, I think it is always that is the budget. Basically, your budget is nothing else but the gap between the expenditure and the income.
Yes.
And at what level do you settle down? That is the most important thing to watch.
Yes.
And I think since RBI has also been on the pause, the government would like to show a roadmap of fiscal discipline. Let me tell you that last year they did a fascinating job of controlling the expenditure, and that's how we'll be able to reach, in spite of the economy slowing down and in spite of the denominator being low, we'll still be able to achieve 3.9% because the government was able to stick to their expenditure discipline last year.
Right. So, Madhu, the graph out here shows, I mean, if you see the pies on your screen, it shows a declining trend in the fiscal deficit as a percentage of GDP.
That's right.
Do you think 3.5% for the year ahead and a likely tightening of the fiscal deficit for the years ahead is something that is achievable?
I think 3.5 to 3.6% is achievable for this year. This is including the pay commission hike, which we are assuming will come through this year, because railway budget has already indicated that they passed on. So you can't have 2 policies for the same government. So that's one thing which I would say. Second, I would say we are taking, in our internal estimate, we are taking a very aggressive increase in capital expenditure. In spite of that, I believe they can achieve 3.5, 3.6%. And if that is done, I think it will be a solid statement coming from the government in these challenging times.
Okay, there's one more point that I want to draw your attention on, and if we can have the graph of how the revenue of the government has been, and we've just tried to take a small depiction of how the divestment targets and proceeds. So these are the proceeds or the estimated layouts by the government. As you can see, there has been a substantial increase in the revenue estimates from divestment alone. 69,500 at this bar is showing. And now we'll get you what the actual proceeds have been. And quite frankly, if you just look at what's happened in FY16 itself, I mean, the figures were very good these 2 years, but if you look at FY16, that is where the problem is. And Madhu, what can this government do to enhance the revenue? Because almost all the others are line items, wherein the uptick is not coming in a substantial manner. How can the government change that?
So I would say that on the revenue side, 2 or 3 things which would watch this year. One, I would say that the personal income tax collection. Again, this is the deviation from the street. The street is quite muted. I am saying if you have the pay commission increase, then obviously it should correspondingly result into slightly higher income tax collection. So that is one thing which we need to watch. The second thing which I would watch is the service tax increase from 14.5% to 16%. Because again, in line with GST, they may actually do it, and that looks like again the big item. Third, I would say that broadly they should assume that since the economic survey is already out,
right,
and they have already assumed around 11% kind of a nominal growth. So you should have the corporate tax, you should have the excise duty increase between 11 to 13, 14%, and that will not be an aggressive assumption to take at all.
Okay, I have one last question.
Yeah.
The most important and the dreaded word, so to say, right now is the ushering in of long-term capital gains tax. Is that the single most crucial point on your agenda, or are there other things that will also top of your mind?
That is definitely on top of mind, because by any logic, certainly the timing is not right, even if they have to do it.
Right.
Markets have been very nervous,
right,
the timing is really wrong.
Right.
I personally do not believe that long-term capital gains is something which the government would like to open the Pandora's box at this point of time. But if that were to come, what form does it come? Do they only increase the period from 1 to 3 years? Is there an actual tax which comes on long-term capital gains?
Right.
How will the foreigners react? What will the proposition for people who are not coming through the treaty versus the people who are coming through the treaty? So those are plethora of questions which will come if you touch on long-term capital gains. And sentimentally, I don't know what the real impact is, how much sentimentally it will be hugely negative.
But could it be only for a day or two, and will the markets reconcile to that, or do you believe it will have a lasting impact?
I don't think it will last only 1 or 2 days. I think it will have a lasting impact if there is an actual capital gains tax which is being put in.
Okay. Madhu, one last question. What else? We've discussed the fisc, we've discussed capital gains. What else would be the most important parameter to monitor, according to you?
So I think, you need to watch for what is it which they do for growth. So I would be watching very clearly, because see, we are in the third year of the government now. 2 years down the line, there are elections. So if you do not do enough stimulus in this budget for growth, then you're not really preparing for 2019 in that sense. So I would say that what is it which they do for the rural India? Because if you see the result of late elections, obviously, it has not been in the favor of the ruling party. So I expect
and there are 4 elections coming up.
Big time spending as well as announcements from the rural side, whether it is on agriculture, whether it is on affordable housing, on rural housing. So you will see a plethora of announcements come on the rural side. Second, I would say they should do a lot on the housing, because that has a huge multiplier impact. As I've been saying, that it touches more than 50 industries if you do something for housing. So I would be waiting whether they increase the limit for deduction from 2 lakh rupees.
So many people are hoping for that.
Exactly. And I'm sure something of that record should come.
Great. Madhu, so much more to talk about, and we'll have a chance to do that all through the trading area. But thanks for giving us a synopsis of what you anticipate this budget to do. It's back to you guys in the studios. I'm sure your guests have a plethora of answers when it comes to this as well.
Neeraj, I think the sum and summary really are just two for Indian markets. Number one, what will happen to the taxation structure, and what will be the status of the fiscal deficit. But I want to throw in one more ingredient, which is the focus and the thrust towards the rural economy. Rashesh, historically, every time when the finance minister has given a preference or has given an open bias towards the agrarian economy or the rural economy, markets have always disregarded that. Markets have always dismissed that. But currently, the rural economy is under stress. Monsoons have not been excellent for 2 years on the trot now. Commodity prices have come down. So secretly, do you think a thrust towards agrarian economy, more allocation to rural India will be applauded by the markets?
I think it will be, because I think everybody has realized that the last 2 years has been a lot of stress in the rural economy, especially given the bad monsoon, commodity prices coming down, and it has actually resulted in a consumption slowdown. And if you go back, and the trade-off has always been that if you give some sops to the rural economy, it does boost consumption, but it also creates a little bit of inflationary pressure. I think the trade-off this time is going to be that you can afford a little bit of inflationary pressure because inflation is under control. It is not the main focus item. So I do hope that there will be a fair amount of spending in the rural area. We should remember that there are quite a few state elections coming up for the next 8 quarters. There are about 5 or 6 elections on the anvil. And there has been a lot of research which has shown that agricultural growth and rural growth has actually always been beneficial to the incumbent government. So keeping that in mind, I think we should expect that there'll be a lot of spending on that. And I, for one, actually will applaud it. And I do feel that this should be the budget where the government should raise and spend. But they should not raise the additional resources through taxation, but more through selling of assets.
Hi Madhu, welcome to the set.
Thanks, Nikunj. Thank you.
So Madhu, according to you, this has to be in balanced budget. So define the word balance. I mean, Jayant Sinha said that he will not disappoint anyone. But a please all budget is next to impossible in this kind of an environment.
No, but I would not agree with that, Nikunj. Please all means you're not trying to go one by one, all 120 crore Indians to be pleased. But I think they have a scope. See, the most important thing is there a scope for fiscal consolidation, because budget is nothing else but a difference between expenditure and income. I think they have a clear-cut roadmap. If they want to stick to 3.5%, 3.6%, they can clearly stick to that number. So that is something which will be watched very carefully by the market. Second thing is, do they do enough? And that's what our call is, that they will do enough to stimulate growth, because this is going to be the most important budget of this government. After that, then you go into the election mode and the tough decision making becomes even more tougher. So in this budget, will they do enough to stimulate growth, and do they have enough fiscal room to stimulate growth? We have done our number. So even if you assume 20% growth in capital expenditure, and there are a variety of other means by which the capital expenditure can be boosted, I think that is one thing which we have to watch for. If they do enough to boost growth, then I think it will be a fantastic budget and will be viewed. And third, I would say, no bad news is good news. So you have to wait for bad news in the form of capital gains tax. They should not touch. See, sentimentally it is very important that, we are in a very weak sentiment. Markets have given up. Last 1 year, investors have lost 20%. Last 1 year has been very disappointing in terms of market performance. So sentimentally, bulls are tired. So I think you don't need another bad news at this point of time.
And Naren, I want to come to you on this one. Like Madhu is saying, it's been the worst of all years for the market. We are back to pre-Modi levels. What is it that the finance minister can do besides the dreaded acronym LTCG? What can he do to please the markets?
I think basically, the problem is we were expecting that actual interest rates will come down in the economy. I am not, despite 1.25% rate cuts by RBI, there has not been any practical interest rate drops in the economy. See, our view last year was that interest rate drops have to first happen before you see actually a leveraging cycle develop in the economy. So I think something has to happen in that area, that, you can't have government borrowing at 8% when you have wholesale price index being negative. If government borrows at 9% real rate, then where are we as far as the growth is concerned? So I think what we are looking forward is, first the debt investors have to make money. And once the debt investors make money, I think we will set the stage for equity investors to make money. I think investors, otherwise people happily sit in debt. Today, if you see even the two big up moves in 2003-04 and 2009, both those up moves were after big drops in interest rates. And I don't know why the equity market believes that without big drops in interest rates, you're going to see equity markets go up. I'm a believer that equity market will deliver returns once debt market has delivered big returns.
I'm going to take a leaf from what. Yes, please.
So what Naren said, this is the biggest problem, underlying problem right now, is liquidity. Yeah. Because see, people are underscoring the fiscal deficit at the state level. Center is doing a fantastic job, yes. But state fiscal deficit this year is estimated to be 3.5%. So if you just do back up the envelope calculation, 3.5% for center and 3.5% for state, and last year your net financial saving system as a whole was 7.7%. And if you take away 7% for the government, then what is left? And that is what is speaking out in the form of interest rates. The fact that the state governments are borrowing at 9%, Maharashtra government is borrowing at 9%, Gujarat is borrowing at 8.8%, it speaks about the underlying liquidity problem which is there in the system. And the only way it can be fixed is to bring the growth back and hope that the saving itself will go up. Because you have closed the door for ECB, you have said that 10-year is what you need to borrow. So where else the money can come from?
So, Hiren, how is he going to solve this liquidity problem?
No, I think, see, the part of the problem of interest rates not going down has been of transmission, right? And transmission hasn't happened because of the problem with the banking sector. So obviously one is to solve the problem of the banking sector, give them capital so that, you know, you have at least transmission of lower rates down to the borrowers. The problem is that the banks are unwilling. They are now pricing in the risk which they should have priced that risk earlier,
10 years back, yeah.
Yeah. The second, I take the point that, you know, I think that if this government sticks to the 3.5, 3.6 fiscal deficit target, then the RBI now has to respond by infusing liquidity and cutting more rates.
I think,
right?
you know, today's the day where the finance minister Shah should go and be bold. This is time to take a bold decision. The political mandate is there with you. There's a crisis in the system right now. Banks, they need all kind of an help. And if you're able to do something out of the box which markets are not prepared for, this will really revive the sentiment. What drives the market in the short term, we all know. Sentiment and liquidity. Sentiment is broken down, liquidity is not there. So I don't think the finance minister can do something extraordinary to revive the liquidity. But in terms of sentiment revival, maybe this budget can have the right messaging, Rashesh.
Yes, and I think to answer the question of where will the resources come from, I think it's obvious to all of us that it can't only be the India's financial savings from the households. I do think now we need to look at a global sovereign bond offering. Government has to raise a lot of bilateral,
FDI flows
resources.
have not been bad. So at least on the FDI front, there has been
Absolutely.
some success.
Absolutely. FDI, I think if the government goes and borrows in the sovereign bond market, which we haven't done at all up till now, given the global interest rates being so low, global liquidity being so good, I think government has to embark on a very aggressive global capital raising plan for the government through bilateral, through the sovereign bond offerings, and through accessing the international markets to raise capital for India's growth.
Madhu, by the end of the day, one big event risk is going to be behind us. The reason why markets have been volatile in the month of Feb is because there has been an event ahead of us. Global markets, frankly, in the month of Feb have not been that bad, but Indian markets have fallen almost like a bottomless pit. Whatever may be the outcome today, if the event risk is behind us, do you think that will be a respite and a relief for financial markets?
The relief will only come if the reversal in the foreign flow happens. Because we have see at the end of the day that is the root cause of the problem, and we are hoping that this event will somehow ensure and assure foreign investors that the India story is intact, and we have to look forward. To that extent, I was very nervous in the beginning of the year, and I was very vocal. But I am more sanguine now because oil prices.
So you're bullish now?
Yeah, I am more constructive in a sense that there is a better sentiment for foreigners because across the board, emerging markets have been doing well. Brazil is up 30% from the bottom. Oil prices have moved up from $25 from the bottom to maybe $36, $37.
Yeah.
Global markets are doing well, and it is very convenient to blame the global markets for India fall. I for one do not agree right now that global markets are doing very well. Last 15 days, global markets, there's been no problem. It is the India specific problem that foreigners have been selling India because earning growth has not happened as we were anticipating. And for that again, budget is the point where you need to boost up the growth outlook. Hence, it will get reflected in the corporate earning outlook. India has been the worst performing market in the last 1 month.
Yes.
But that's because, Madhu, we were the last ones to fall, right? We were just realigning with the rest of the globe.
Yeah, partly that is the reason, but that's the point that, when we were in January, global factors didn't matter a lot. What I'm saying is global factors to some extent have got aligned. Now the ball is in our court to deliver earning, to deliver growth here, and subsequently hope that the foreign investors selling abates, because if you have 1,000 crore rupees every day selling, and frankly, mutual funds and retail public has put in a lot of money, but the fact is that whoever has put money in last 12-15 months, if he has not made money, even the most mature and sophisticated investors will feel nervous if you keep putting money if you don't make money. So I think we need a reversal of the foreign flow if you have to see the markets go much higher from here.
That is the bedrock.
In the hot seat, the finance minister today, he better deliver. That's the word coming in from our market panel.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.